Late start. Tough morning. I'm here though. Yeah, I have a kid throwing up. These things happen. Bum bum ba bum ba bum bum. Bum bum ba bum ba bum bum. You guys ready? Of course you're ready. I have to pull up the chat.
New England's Bailey says rates are on a gradual path down. More evidence needed.
I gotta find. All right, I think we can go. I gotta find the music. All right.
Bank of England's Governor Bailey adds the services inflation in the UK is still elevated.
What the heck is that? Where is that coming from? I think I know where. Is it there? Maybe. I don't know. I don't know if this is going to keep... Oh, I think I know what's happening. All right. We'll see if that stops all the distraction. Anyways, what a day. What a day. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. Let me remind you that trading's risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. All right. Here we are. All right. Let's start with the process.
Fitch Ratings says that US state budgets are poised for slower growth.
I don't know where this is coming from. Hang on, I got so many windows.
1 minute now to the market on open imbalance and the US cash equity open.
I'll kill that. I will kill that. I will kill that. How many windows does Wayne have open? Where is it going? Oh, now, no. Shouldn't be coming from there. Shouldn't be coming from there. Yep. Yeah, see? I'm telling you, it's just one of those days. Let's go to this. It's just one of those days. It's not that page. Is it that page? No, it's not that page. That's my snipping tool. What the heck? Where is it coming from? Huh. I'm not entirely sure where that's coming from. It's a glitch in the matrix. Oh, I know where it's coming from. Oh, shut the back door. All right. Found the gremlin. I think that'll do it. Are we live or are you even here? All right. Let's bring it back. Bring it back to me. All right. Yeah. All right. Hey, you have a choice. You can have a broker that trades against you or a broker that cheers for your success. because you have to have a broker. That's it. So you either decide to choose a good broker or a bad broker, and most are not good. So anyways, I recommend Traders Way. Check them out. They're an ECN. You want an ECN? Yes, you want an ECN. So there are not many ECNs. Most brokers are not ECNs. Traders Way is. So go check them out. See if you like them. But I recommend them. Then we get into TRADARS. Is everybody in TRADARS yet? I think so. All right. So, radars for TRADARS, right? Radars for traders. So check it out. Last night, the database updated. And I can tell you, based on the summary of economic projections, what the Fed has planned to do. We don't have to guess. So people are debating and master debating about what the Fed's going to do next. Well, I'm not a master debater, but I am a cunning linguist. And when I look at our data, okay, check this out. What we know is we went from 5 1/4 to 4 3/4. Okay, remember this is from the bottom half of the range, 5 1/4 to 5 1/2. So 5 1/4 to 4.75. Okay, but by the end of the year, we will be here. 4 1/4. Okay. Okay, 4 1/4. So we have 2 cuts by the end of the year. Or I should say 50 basis points. Okay. When are the next Fed meetings? Let me just show you. Oh, here it is. All right. Okay, 2024. We have one in November. And wait, I'm going to be at the Fed on the 7th, aren't I? Damn, that is crazy. Anyways, 4 1/4. Let me see. 1 in November and 1 in December. And the Fed has already told us they're going to cut 2 more times by the end of the year. When did they tell us? It's in the summary of economic projections. So now you know. See, you hear people on TV and they argue and they give you opinions. I'm like, didn't you read the SEP? Right? It's amazing. Experts on TV don't read the summary of economic projections. So they guess and they tell you their opinion. I would say, well, according to the summary of economic projections, the Fed has 50 basis points more to cut this year, according to their own opinions. And there's 2 meetings left. So they're going to drop to 25 basis points per meeting. It's factual based on what they have told us. Now, you can guess, and you're like, well, they're all liars. Well, you sound stupid when you say things like, they're all liars. No, come on, bro. They're doing what they're doing. You have facts. Those are the facts. The facts can change, but they have told us what they are intending to do. Okay, what else are they intending to do? In the first 3 months of January 25, we are going to go from 4.25 to 4. So what do we know? They are changing their pace in the first quarter. So they cut in December, pause in January or February. I think it's February, right? So they cut in December, they pause in February, they cut in March. Oh, and with a piece of traders? Yeah, how about Wayne at TRADARS.com? No, thank you. Okay, so anyways, isn't it nice to have facts? Facts, my friend, facts. We have facts. And you're like, well, what about the Bank of Canada? Yeah, bro, you are powerful. Okay. What about Australia? Interesting. Where did it go? There we go. Okay. Cool. So we have that all plotted out. Very nice, right? Cool. What should you be doing right now? Nothing. Cool. So just briefly, the way to sign up for TRADARS. Okay, fully automated technical and fundamental analysis. Automate the grunt work of your trading. Our radars conduct real-time technical analysis on 7,500 charts and hundreds of economic data points to uncover reliable opportunities for you. Stop wasting time. Focus on the most reliable setups. Cool. Have to update that video. But essentially, there are some choices here, 3 choices. You join the technical trading team and unlock the technical radars. You join the fundamental team and you unlock the fundamental radars. Or you join the news trading team and unlock the new volatility radars. Or you get the complete package. Traders Pro Monthly unlocks all 3, plus this, which is the swing trading group. Yeah. Very, very, very cool. Let me tell you, yesterday we used the new, our new tool, our volatility radar. And it did extraordinarily well, in my humble opinion. Ooh, look at the watermark. Tradars.com. Nice. moving right along. Yeah, see, we're making progress. How exciting is that? Anyways, even though we had crazy price action yesterday regarding the Fed meeting, based on this new tool that we're using, which is implied volatility for things like foreign exchange currency pairs and WTI and stock indices and individual stocks. I actually have the stocks turned off, but you can add them, right? It's the same stocks we track. Okay, cool. So we've added them there. Very nice. Okay. But despite the undue volatility around the crazy change in monetary policy at the central bank, you'd think that that would be a one-off unique scenario relative to what always tends to happen. Well, guess what? Always tends to happen still worked. And that part was actually a little bit shocking to me, but I understand implied volatility and trading the vol, but also trading the spread. So now when you have implied volatility, you can do both. And I've never had it visual. I just understand the concept. Okay, great. But oh my God, it worked beautifully yesterday. So anyways, what this new tool is showing you is one of the best things to be trading right now is WTI. On Thursdays, okay, in the 9 o'clock hour. Cool. Silver. Okay, silver. One way, I'm not saying this is the only way. That one way to trade this, though, is this range here based on what has happened this time of day on this day of the week, going back 6 months, which is, 26 scenarios like this. One way to trade this is sell it off the top and put your stop above. And that's compressing the spread. Now, it's a scalp. Okay? It's a scalp. Yeah. Yeah, that's interesting. Now, I'm a trend trader, so I don't love scalps. So what I would do is something more like that. And then it would say, based on implied volatility, your stop should be lower than that. Okay. Cool. And I'm a trend trader, so I would let this run days and days and days. This is just showing the implied volatility in the next hour, the next 4 hours, and the rest of the day. Yeah. Super ridiculously cool. Okay, how about the no diggity, no Dow? Okay. Based on 26 Thursdays, that's the implied low of the day, the implied high of the day. And again, just in case you're not sure what I mean by implied, we look at every daily candle on Thursdays for the Dow. 26 Thursdays. And you look at the amount Dow moves on Thursdays. The high, the low. Plus the high and 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 the low. Right? The spread between the high and the low. Add them all up, divided by 3. Add them all up, divide by 26. And you get an average range of here. So one way to play it is buy at the low and take it to the high. Neato. Now, the other way to play it is you want to counter trend it maybe. I don't know what you want to do. Oops, we'll do it in black. Okay. So the best place to counter trend and compress this move would be sell it somewhere up there if it rolls over. But if it does roll over, and then you want to put your stop there. Because it could still do that. You don't know. But anyways, it's really good. Now this updates dynamically, so you could just leave this page on, and as time goes by, it just updates itself and it says, okay, stop watching Dow, start watching something else. So earlier this morning, what time was it? About 7:30 this morning? There was only one or two things to look at, and everything else based on quantitative analysis of these markets at that time of the day, 7:30 in the morning on Thursdays, there was only two things that you should look at, and everything else was mediocre. You see how crazy that is? But it showed you what the one thing was. Okay? Yeah. So there's the hourly chart. I believe it was. So that was 2 hours ago, right? So what we were talking about is this idea of 4 hour low, 4 hour high. Now, of course, that changes as you go throughout the day. The orange lines, the high and the low, will change because, right? Because it changes throughout the day. And you can see, actually, this is a great time to be trading Bitcoin. And next hour is the highest vol, so this will go up a little higher, right? You would assume. And then the rest of the day slowly withers out. So you're like, oh, so don't trade Bitcoin here. No, that's not what I said. I said this is an expansionary period of the day, and this is a contractionary period. But that just means less volatility, less spread between the high and low for each hour. Each hour gets a little tighter. But what this tool is doing is also saying, okay, based on the opportunities presented to you, meaning how much is Bitcoin likely to move in the next hour, it's also comparing it to all the other assets. And so things that are not likely to move are lower priority. It just happens to be market open. Everything's moving. Everything's moving. But 2-3 hours from now, that will not be the case. All right, look, don't trade Aussie Kiwi. Why? The Asian markets are closed, bro. That's the worst thing to be trading right now, Aussie Kiwi. The projected volatility is terrible and is going to get worse. Cool. Isn't that neat? So everything right now is a good opportunity. That's going to change throughout the day, and this page will continue to update itself. And again, if you only want Forex, easy to correct that. Take out the indices, take out crypto, take out commodities, and just do Forex so you can really focus on what you want. What you really, really want. Okay? So you could do one of these things. Somewhere around here would be the implied 4-hour high, and then take it down to the daily low and put your stop just above that, because it's not likely, based on 26 Thursdays, it's not likely to go higher than that. Now, it can do whatever it wants, but it's unlikely. Dude, this is getting good. Like, TRADARS is getting good. Like, it went from pretty good to, like, it's getting really good, don't you think? I'm not tooting my own horn. I am excited. So when you click on it, it'll actually describe what some of this stuff is. So you can read all this. And you're like, because I know it's a little on the more advanced side. Okay. But it'll explain, like, exactly what does that mean. Okay. But in layman's terms, check this out. Just look up here. So for euro pound, or let's pick another one, for pound dollar. Now, pound's moving a lot today because of the news, right? Okay, but, next hour, next 4 hour, next 24 hours. So in the next 4 hours, pound dollar is likely to, be in the range of 132 to 132.50. And these are live charts, by the way. Descartes, the easiest answer is everybody should be on pro. Okay, but some people are going to say, well, I only want to do the news stuff. Okay. What you want, what everybody wants is pro, because it gives you everything at 50% off. That's what you want. So that you get the news team, the fundamental team, the technical team, the swing team, the training courses, the coaching. Dude, like, look at our schedules right now. I'm doing an event today to give you a third upgrade. Okay. And then tonight, Japanese inflation live coaching. And then later, now I don't know how this is going to get done because there isn't an exact time, but all right, well, whatever. There's 11:45 tonight, another live event. Tomorrow, I'm doing a live stream at FX Street. On Sunday, I'm doing a technical trading team. Right? On Monday morning, I'm doing the fundamental trading team. Okay? Going out to Tuesday next week on the street, which is a swing trading group. Here's, again, more a technical event, a fundamental event. I mean, right? My gosh, look at the amounts of, right? No, there is a swing. There is. I forgot that was accidentally deleted. I forgot about that. There absolutely is. Okay? Yeah. In fact, let me just start that. Well, I guess this is another. All right. Please remind me, somebody. I have a sick kid. Like, as soon as this is done, I got to run upstairs and make sure she's doing fine. But anyways, like, the amount of support at TRADARS now, and I'm going to add a lot more stuff. There's going to be stuff almost every hour of the day, it'll seem. So you'll really need to manage your schedules. Okay. All right. So anyways, at the fundamentals meeting this morning, we found something strange. Oh, sorry. The dollar was weak, but the yen was weaker. Ooh. So is that yen's strength over now? It could be. Like, seasonally, that would be normal. So that'd be interesting. We talked about that was it last week? No, 2 weeks ago in the swing trading group. In which we were approaching double bottoms, and someone basically wanted to buy off the double bottom. I'm like, well, you're gambling, you're guessing. I'm like, it might be right, but you don't know if it's going to drop 300 more pips and then bounce. I'm like, so our job isn't to guess and to bet, but instead confirm with technical analysis that support was respected and it has reversed. Okay. By the way, look at, on the charts, it went from co to com. Wow, that's good. Okay. Okay. All right, all right, all right, all right, all right. So how do we want to filter this? This really what it comes down to in our with our alpha. Like, what do we want to be looking at? Do you just want to look at yen pairs? Do you just want to look at dollar pairs? Like, one thing I do want to look at is, try to answer the question, is the yen strength over? Are the yen pairs going to start going up again? So you can isolate the yens and say, okay, show us the patterns. Okay. Yeah. And so you're like, okay, what do you think? We're looking for reversal patterns or trending patterns up, and ideally longer term time frames than the shorter ones. Okay. But the shorter ones are going to turn first and then drag the longer ones up. Now you can see some of these patterns have some complexity to them, which tells me like, yeah, maybe, right? Like maybe. So we're trying to see, are these yens going to start to want to go up? Oh, come on. Well, that could create a role reversal. Okay. Has this created? No, I don't like that one as much. So what will likely happen if it starts to go up, I would look at it this way. At some point, we get sort of an uptrend, huh? That's what I'm looking for. Now, on Kiwi Yen 30 minutes, it's looking a lot better. Now, see, like, to me, Gartley's are too complex. I just want to buy that. Like, why do we need all this crap? I can never figure it out. Why does anybody need all that crap? But some people love it. So, hey, if it helps, it helps. It's good. Okay? So I just like to buy the roll reversal and take it up. And that's the current plan. Okay? 28 minutes ago, you were alerted. So you're already on it, right? Yep. But let's get further out. Like I said, I want to see like maybe hourly charts heading to the upside. And I want to see, maybe even 4-hour charts. Okay. Now, these to me are not trading patterns. They're scalps, by the way. You could scalp up to there, but that's not how I look at it. To me, TRADARS is showing me that if there's a breach of that at that price level, it's technically important. I don't know if that is a trade per se, because I don't trade breakouts, I trade pullbacks. So like this CAD yen. Okay, there's a possible, remember, these are emerging. These are emerging. So the possible breakout of resistance at 105.50 might take us up to 106.50 or even as high as 108. Great. So if that's happening on a smaller time frame, like a 5-minute chart, you might want to do a little dipsy-do pullback and take it long. Okay? Yeah. The next thing is if it makes it that high, then catch the pullback, and then that's the trade. See, it's just identifying patterns. There's no trade alerts, okay? Okay. So, for example, an up move identified an hour ago on Swiss yen in an up channel. Is that a trade opportunity or is that a trade threat? Okay. Maybe I'll put this in a training course, but let's think about it. Okay. Some of you old timers from the 80s and 90s probably used to do SWOT analysis as part of your business planning. Strengths, weaknesses, opportunities, and threats. Okay, so the first thing is, okay. Okay, let's say, does this up channel identify strength or weakness in this currency pair? Strength. Okay, so is this arrow off the bottom an hour ago? Is that an opportunity or a threat? Yeah. Yeah, there you go. There you go. Oh my God. Okay. An hour ago, USD yen. Is this strength or weakness? Okay. Yeah, notice we have 30-minute analysis and hourly. I hope you appreciate, like seriously, I hope you appreciate that you are now watching 7,500 charts. I mean, are you comprehending this new fact? As a subscriber to TRADARS, right? Traders.com is analyzing 7,500 charts. And it's telling you, hey, USD yen, yeah, it's working on the 15 and on the hourly. Cool. You didn't miss it. Cool. So it's strength. And then are these opportunities, this leg in the pattern, is it an opportunity or is it a threat? OPP, yeah, you know me. Okay. It's great, isn't it? Yeah. Okay. Rising wedge breakout. Okay. Does this rising wedge show strength or weakness? Yeah, well, it's hard, right? I actually want you guys to answer. Is it strength or weakness? I guess it's just me and JP. Yeah, okay. So is this an opportunity for a bear because of the down arrow, or is it a threat to a bull? Is this an opportunity or a threat? Yeah, it's a threat. Down doesn't mean sell. Down means if this primary support line breaks, then bulls need to beware. But it is not an opportunity for bears. Okay? Bears sell double tops and lower highs. If you were a bear, bro, if you were a bear, you would probably look to sell that double top, or you would look to sell a breach, making a lower low. Meaning what? You could sell at the top or let it break, pull back, and then sell. Has any of that happened? Well, you might have a little double top. You have to, okay, right? Maybe. And look, it's already happened, right? Yeah. See, that's what a bear would have done. Okay? Notice that it wasn't the break, it was the pullback. Okay? So, right, HK, it's only, but HK, it's not an opportunity for a bear when the trend is up. Okay? It's a threat to bulls because it might reverse. Okay? You don't trade might. Favor, just join. I don't need to do it. You have access. You can do that whenever you want for as many assets you want. Have you seen this one? Let me show you a favor. Okay, check this out. Under seasonality, we have a seasonality scanner. Favor. Yeah. Okay. Look at this. This week is typically not great for gold. And next week is typically worse. Ha ha ho. Whoa. Whoa. What? 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 Shut the back door. Yeah. So we have all these new tools, guys. Oh my God. This is what I'm saying. This is getting really, 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 really good. Under the news trading banner, you can look for scalps. These are all scalps on commodities. See, there's a little move here. Maybe oil goes up. Now, this is a pretty big one. 8 days. These are typically much smaller. Like this would be more typical. Right? Like a 9-hour move. Looks like we already hit target and we hit that target. Or we missed them by, a tiny little move. Let's see. So, yeah, it looks like we hit the conservative targets. Okay, like you can see the signal, aka signal, because this is a pattern that has actually worked. Remember the difference between the technical radars and the scalping radar is that the pattern is no longer emerging. It's actually in play. It's an active trade. It has happened. Not that it might happen. It is happened. So you can see right here is the vertical line. So this is when you were alerted. And TRADARS said up to the green zone. And we hit it and then it collapsed. Okay? So you probably got this price. It was around, I don't know, 71.5. And it made its way to 72.25. So it jumped 75 pips. Okay. Yeah, in terms of money, it's the same as 75 pips on a euro dollar. Cool. Hit target. Okay. Now, I would still think that there's a possibility that you get a new trend out of it. Now, a triangle like you're looking at is there's no trend. Okay. Lower lows and higher lows. Sorry, lower highs and higher lows. So there's no trend. But there probably, or could be, or let's say the probability increases that we do have a new trend, and the new trend is up, down, and gone. Now you never miss things. You never miss things. You never miss things. It's cool, right? So these are all in play. And so that one worked and that one worked. Looks like silver worked. Let's zoom in on the silver. Okay, so on the vertical line you were alerted. But see, that's what I mean by scalping. It was probably only 10 or 15 pips, if you will. It's commodities, but you know, by the time you got the alert, you know, where it was at 31.20 and it went to 31.33. Like, okay, you know, that's what I mean. Like, that's a scalp. But it's not fair to say this is only scalping. Okay, these are active trades. It's truly the way to explain it. So when you go to like Forex, you're going to get too many opportunities. You know, we all have problems, right? I have so many opportunities. Yeah. All right, so move it from 60 to maybe 75%. Okay. Actually, it looks like I can update this page. I don't think it's all right. I can give you more. I can give you more than that. So anyways, let's move it to 80. And that's when you really typically get scalps. You're like, look at that. Okay. You're like, wait, what does 80% chance you'll make a nickel? Yeah. Okay, whatever. And I don't like those types of patterns either, right? So you can see there's lots of these little things like, okay, we tested support, we tested support, we tested support. So maybe, you know, kick it off the moving average and test support again. Yeah. Now it's daily though. Yeah. It's daily. So entry 84.20. Oh, look at how close the stop is. See, I don't like that. But maybe this is updated and it's already moved the stop. That stop is basically at break even. But the target is 83.89. I mean, that's only 30 pips. So you don't have to love it. You don't have to like it. I'm like, see, I don't do those, but you could. But that's what happens when you take out, like, take away all the risk, Wayne. Give me the highest probabilities. They're the highest probabilities because they probably have already started days ago and they're already 80% done. Okay, so that's why you want more realistic. And then I prefer cleaner. I don't like selling into support or resistance. I wouldn't buy it to take it up. I wouldn't mind a break, pullback, long gone, but that's me. So here's a breakout pullback. So like maybe this is better. Entry 94.50, target 94.90. See, I would take it longer. If I got that much, I'd stay in it. I'd just jam my stop. But remember, it's only doing patterns. So yeah, you can see we have on the vertical line, we had the up, and then over the course of, I think it was hourly chart, an hour it dropped, Okay, and now you can take it long. Buy the dip, take it up here, but I'd like it to go up to 95 and beyond. So that's why you really want to filter through things and fundamentals. Now, if you've done that, you know everything is mediocre right now. Okay. Now, traders likes this as a scalp. Okay. So what it thinks is happening. Okay. Is that the channel, that the apex is broken? I would have to look at that. Okay, I would have to look at that. See, I'll tell you once again what I would do if I were me. Okay, I would look, delete. This is how I always trade, by the way. I would look for a higher high. And so that's what TRADARS is saying is if the pattern is broken, that's the likely target. How do you come up with this target? It's looking at this range and it's looking at this range. Okay. Okay. From there to there to there to there, move it over. So you take this and this and you move it there and it gets you from here to here. And then you move this over and it gets you from here to here. Not complicated stuff. Remember, it's not thinking. It doesn't have a neural network. It's just, it knows how to trade a pattern. It's spotting it for you and doing the grunt work, but you know how to trade a pattern. It knows how to trade a pattern. It's just very good at doing the math instantly, right? So it does the calculations, boom, boom, boom. Bada bing, bada boom. Okay, great. But WWWD, what would Wayne do? I prefer like the up, the down, and the gone. So I don't like trading the break. I like trading the pullback. Capiche? Oh, for sure. But I appreciate the heads up. Hey, if this breaks, then catch the pullback. Appreciate it. So the way that this is all supposed to work is you're a boss. You're the lead trader on a dealing desk. And you have a bunch of grunts working for you. Some of your grunts do technical analysis. So maybe each grunt is watching 10 charts. So if you had 10 grunts, they can watch 100 charts. But now they have to watch those charts on 5 time frames. So that's 500 charts. Well, of course, TRADARS is doing 7,500 charts. But anyways, you have a team of grunts watching all the charts on all the different time frames and then showing you things that are actually happening. They're not all opportunities. Some of them are threats. Some of them are far off opportunities like, hey, if this breaks, the opportunity is the likely new trend. But that has not happened yet. But in the future, wouldn't it be cool if you got yourself into something like that, the new uptrend? Cool. Well, this is how you're supposed to be looking at all this stuff. And you're like, okay, well, TRADARS is right. The up, the down, and the up. Yeah, well, that's what I just said. But the thing is, you might miss this because there's too many things to watch. So most of what TRADARS is doing on the technical side, whether it's patterns or implied volatility is another great example. Seasonality, the seasonality tools. One of the major benefits is that these tools tell you to watch this, not that. And there's probably 2 different types of traders in the world. One that trades euro dollar every day, no matter what happens. Or the other trader that just cycles through charts over and over and over and over, looking for something to do. Should I buy this? Should I buy this? Should I buy this? Should I buy? And you're just cycling. And you never, right? You never really find anything of value because there's too many things to look at. And the one thing you bet on is either late, or you bet on it and you make money and you're like, man, I had such a good day. I made 50 pips. But there might have been 5 other trades that were better than that. And you didn't even see them because you're like, ooh, I like this pound dollar. And you buy it and you're up 50 pips and you feel good. But if you had made a better decision, it might be 75 pips or 100 pips. It's relative, isn't it? So there's more to it than just technical analysis. You have to know what to analyze. You can be doing fantastic technical analysis on the absolutely wrong thing. And so when you look at the scatter plot maybe, or you're looking at the scorecards, or you're looking at the technicals, or you're looking at the volatility, what you're always asking is, what should I focus on today? What should I focus on now? And if you get that wrong, even if you're good at the technicals, you might end up with mediocrity, which I suppose is not the end of the world. You're not going to die of mediocrity. You'll just die of boredom. Okay? Nobody says, what a great mediocre life I'm having. So what's the difference of like surviving versus thriving? Doing the exact same technical analysis, but on the right thing, on the best opportunities, right? And of course, I'm trying to save you time. This is why, I think I will do a training course on SWOT. I think I like that. Is this strength or weakness? Strength. Is it an opportunity or a threat? Threat. Good. We'll come back tomorrow. Done. Oh my God, that used to take hours. Now it's boom. So now you're just cycling through what's a threat? What's an opportunity? What's an opportunity? What's an opportunity? Okay? Pound Swissy is an opportunity right now. Yeah. Nice. Okay? So you're like, really? What else is going on? Okay? And then you can go in and just focus on that one now. So you turn them all off. And what was it? Pound Swissy? Cat, pound. There's my pissy. Oh, look at that. We got Brent and silver turned off. We were focused on gold earlier, huh? All right. Check it out. This is the best hour to be trading Pound Swissy on Thursdays. Okay? Yeah. And we might have already been late on this one. It's already worked. But going out to the daily, that's a 4-hour, right? Going out to the daily, there's some room to run. But see, I don't like triangle breakouts. I just told you why. So what would Wayne do? WWWD. Okay? I would let it break. Good. So it's only a potential opportunity. It's not an opportunity nor a threat. It's a heads up. It's intelligence. Psst. Hey, Wayne. Pound Swissy might break out. Okay? Triangles have no direction. Okay? If it was a flag, this is a flag, right? How do you trade a flag? In the direction of the trend. What about this flag? In the direction of the trend. What's a triangle? There's no directional bias. Okay? It might have been in a range, and then let's say the range is tightening and tightening and tightening and tightening and tightening, okay, into the apex. And then, of course, you're hoping for a breakout, pull back, and now I'd be long and gone. Okay, like this. And what I'm trying to do, and of course, TRADARS would do this for you, it would spot the new trend. That's what I want. I don't want the triangle. I want the trend. I want the burst of after the squeeze. I want this to pop like a pimple. Yeah. Okay. Anybody like that analogy? Okay. So on this time frame, look at the 4 hour versus the daily. 4 hours trying to say this little move here, okay, is tradable. Okay. Yeah, I don't know about that. Okay. Higher high, higher low. You could have bought that. Then they consolidated again. And then you got the signal here. Okay. And once you got the heads up, what happened? Okay. 10 hours ago, we were there. And then it popped already. Let me show you. Okay. It even dropped and popped. So I'd consider this done. It just happened too fast. See, look at the role reversal too, by the way, just like I taught you. So the signal, the price was here. So you wait for the pullback. So then it was followed by a 4 hour red candle. So this was 10 hours ago, 4 hours up, 4 hours down, retest, long, and now we're here. Done. Thank you, TRADARS. Huh? Dude, these technical radars are fantastic. But you have to know how to trade. And you need to understand patterns. So I'd like to, let's say in the fourth quarter, move into doing more and more training courses, more and more training. We need an entire training course on just these patterns. How do you trade this pattern? How do you trade that pattern? How do you trade the other pattern? What about the other pattern? What about the other pattern? We need it all, don't we? Yeah. Oh, how do you upgrade? Okay. Okay, you're in the news trading team. So you cancel that and you join here. Or here, of course. But okay. Again, most people are going to be here. And that includes the news trading team. That includes the fundamental trading team. That includes the technical team. That includes the base membership with swing trading. Yeah. Yeah. See, it's more, but it's less. Pay more to save. Yeah. Look at that collapse on the pig dog, huh? Look at the collapse on the pig dog. Okay, look at that. This is what I'm trying to say. Can I pop this one? I don't think I can. I've never tried that. Nice. All right. So we had that news event, and TRADARS. Delete. Okay, TRADARS analyzed the implied volatility, the implied high of the 4-hour range that we're in and the 4-hour low. Now, it doesn't know anything about the news results. I'm assuming the news that comes out very often happens Thursdays and at the same time on Thursdays. So it captures this. Now, it doesn't always work out that way, but remember, we're doing averages. So inside the implied volatility is the implied news event occurring. So it's looking at 26 news events to say, well, what kind of volatility does this news event tend to create? But I look at this and I say, oh my God, that's pretty informative. Because remember, one of the trading strategies is to compress the spread. One of the trading strategies, like day trading, is buy the pullback and take it to the high of the range. Okay? And one of the other strategies is buy the next dip at the 4-hour and go for the daily. There's all kinds of trades here. But I am very pleased with the way this is working. I'm very pleased with that. I mean, it's amazing. And it tells me other people know this. Other people know this. I see the trades. Okay? Somebody popped it on the news and took profit, which is normal at that range. Okay, so what is the range for the 4-hour? Well, we actually have the numbers. Oops. So we can go back to that. The 4-hour, 1012.06. So it takes the range and then it has to look at the current price and then it creates so you get the actual numbers, 112.06 to 112.62. Let's just call it, 55 pips? Yeah, that's normal now. Now the range is going to collapse. So we just finished the best. Think of this, really. Please think about this. We just finished the best trading time of the day. From 7 to 8, 8 to 9, 9 to 10. Okay? And now we're running out of time, right? 10:30. And by 11, we're going to just lose more and more volatility throughout the day. So what happened at the 4-hour high? What do you think happened at the 4-hour high if we usually start to lose? Think of it as volume. If you're not sure how to think of it as implied volatility, you're like, I don't know, that seems like an options thing. Okay, well, let's just call it volume. The volume of trading is going to decrease. We don't necessarily know if it will stop going up or reverse and come down, because you could have lower and lower volume and still have it go up. But what do you think is happening there? How would you describe that if we know every Thursday and around now, interest in this asset diminishes? Well, that's profit taking. That's profit taking. And it makes it very difficult to make another higher high, huh? Yeah. Yeah. It's not going to happen the next opportunity. Okay? For those that live in the New York time zone, that is the London Open. And that is the New York Open. And we've been teaching at FX Bootcamp and then Investor Bootcamp and now at TRADARS. We've been teaching for decades that those are the times of day you want to trade. But now I can prove it to you. And what days are best? Actually, Thursdays are quite good. For pound Swissy, Thursdays tend to be the best days. Now you know that Thursdays, here to here, you should be focused on pound Swissy. Now, how do you keep all of this in mind? Well, look, it's the number one thing on the chart. And you won't see it 2 hours from now. It won't even be on the first page because it's over. It's done. It's done. Yeah. Yeah, can you make it easier? Right? Yeah. 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 So anyways, so you have to just choose. These are all good opportunities, but you'll see, like I said, in the open market, okay, the opening of these markets, there's tons of opportunities, but it's after that where if you're going to choose the right thing to focus on throughout the day, the opportunities change over time and like every hour. And yeah, I think it'll be important for you to know that you need to switch your focus or that the opportunity has changed. Now, maybe it's not a threat, but at least you'll know there's better opportunities somewhere else if you're looking. Like, let's say you were watching a trade and it never set up. And all of a sudden it goes, pa-ching, have you considered Aussie Swiss franc? You're like, no, actually, I didn't even look at Aussie Swiss franc, really? And it might say, well, it just moved high on the hot list because it typically starts to move now. And you're like, damn, really? Yeah, the implied volatility is increased. Oh. Okay, so now it's getting you to look at the right things. Hour by hour, day by day. And then the other one that I added, on fundamentals is week by week, month by month, which is hopefully also helpful. So you could do things like start with, how about this? You ready? You start with seasonality, and you want to start with the scanner. Okay? And you want to look at things that you believe will work next week. Okay? Now, volatility looks like it'll increase next week. That might bring the stock market down. You might want to pay attention to that. Now, I've asked the developers if they can make this sortable by clicking, clicking this and it moves up or down. They're seeing if that can be done. But let's just eyeball. Looks like lots of things are down. Like, look at this. The stock market's down. Russell's down, right? Like, all the stock markets are down. All the commodities are down. And VIX is up, which totally makes sense. So you could go into this. Okay? You can go into this next week and say, all right, you're going to use the vol radar, but you're a bear. And of course, if you're right, so let's change this. So if you're right, so are there any stock indices, or did I turn that off? Yeah, I turned that off. Let's just look at stock indices. Okay, boom. Okay, so right now is a good time to be trading the S&P 500. Okay, great. But what if next week you thought this could become bearish? because of your seasonality research. Okay, so now you would be looking for like, okay, next week, not today, but what if we started to hit some of these things and technically it becomes more bearish? Well, the implied volatility is still good. Okay, and all of a sudden you're looking to sell double tops or lower highs on the S&P 500 only during the period in which trading the S&P 500 is favorable. And I'm clicking all the wrong buttons. This is the best time of day to trade S&P 500. Next week, S&P 500 is expected to drop more than 1% based on seasonality, and a plus 5% increase in VIX. Okay? So you could then say, during this time of day, starting next week, and particularly probably around Tuesday, okay, if you start to see, let me draw, a lower low, lower high, lower low, lower high, then, this period on Tuesday or Monday, if it's made a lower low, lower high, you will sell it. And you could be day trading it, and the sell might be like, okay, let's say it makes a high and a lower high, higher low, higher low, lower high. Remember, you're already a bear. You're already waiting for it. You'll know what time to look for it. And if you had an opportunity, like kick it off the 4-hour implied volatility, which is probably very similar to a pivot and very similar to other things, and your stop could be here. Of course, it could be above that, your choice. Okay? Now, if it made a lower low, what could we do? Well, the next thing is we're going to look for the next lower high, lower low. And so there might be opportunity A, but definitely an opportunity B. And will Wednesdays work? Yeah. Okay. Now notice what it's doing. I just want to highlight this. Is this the daily candle? No. Everything's being calculated by the 1-hour candle. So this is from the middle of Wednesday to the middle of Thursday, huh? Every hour, this daily range changes because it's really not the daily candle, but the rolling 24-hour period. So tomorrow, it'll be different than this because we're going to lose volatility. Isn't that wild? So it's 24 candles an hour times 26 days to create that statistic. Okay, it's looking at 600. The average range produced by 624 candles. Okay? It's the high and low. No. It's the high minus the low. Okay? Of 624 candles. What do you think of them apples? And every hour it adds the new one and drops the old one. So now it's the high and low divided by 624 different candles. No, it just added one and dropped the other, but it's updating every hour. The range updates versus just like 26. What's the average of 26 daily candles? Well, it wouldn't be variable enough. It wouldn't be sensitive enough. Okay. You just get an average daily range. This is implied volatility hour by 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 hour 20 throughout the entire week. I don't know. I'm sorry. I think I geek out on this more than you guys do. I find all of this absolutely extraordinary. Oh, did it just update? Look at that. No, that can't be right. Let me refresh this. No. Look, there's only these things now. It did it even before the top of the hour. Or did I filter high only? Oh, no. Duh. I only did stock indices. My bad. See, I can't talk and I'll get rid of stocks. I don't know how many of you guys actually trade stocks yet, but I'd like to have a stock trading team too. There's two things I think I could create next, maybe like next year. A stock trading team for those that want to trade stocks all day. The stock market, individual stocks, and or for options, stocks and stock options. Anybody interested in a stock trading group or a options trading group? Okay, what if it was only stocks, right? Okay. Yeah, there's been quite a few options trades as of late, and I think it's maybe the markets are starting to wake up a little bit again. Do I have any emails open? Not really. I think it comes to... I guess I'm in it. Let me see. I thought I saw one. Let's see. Well, there's one. When did this come out? 2 days ago. Okay. So this actually can be, like, this could be put into TRADARS. Okay. This is a prototype. This is for ExxonMobil. Okay. ExxonMobil 2 days ago. Bull call spread. Low risk level beginner. Easy to do. Okay. Buy XOM call September 27th with a strike of 114. Okay. Sell ExxonMobil call 927 with a strike of 121. And there's the chart. Opportunity number 2, also a beginner strategy. Bull put spread. Maximum profit 529, maximum loss 1.71. So defined loss, defined profit. And you cannot make more money than that you can't lose more money than that. And it shows you, it draws the chart out to show you your risk reward ratio is favorable. It's almost 3-1, not quite. Well, yeah, it's almost exactly 3-1. Cool. Long call option. Maximum possible profit. Infinite upside. Maximum possible loss. 189. Whoa! Unlimited upside profit. Cool. So how do you do this? Buy XOM call, 927 with a strike of 114. That's it. You're one-sided. Easy. Easy. Okay? But it still thinks you end up only, you're going to get 5 out of it. But you never know. XOM could burst out now that the Fed is cut, or I don't know. So anyways, there's your straddles, there's your strangles, there's your short, right? Here's your short call butterfly. There's your short put butterfly. Like, here's your iron on condor. So anyways, like, oh my, like I could have this for you next year if you wanted to also trade stocks and stock options. They're only for stocks. These are all stock options. Options on stocks. So we could have an options trading group. We could have a stock trading group that just, you want to sit and trade the stock market all day. And Forex people wouldn't want that. And if you want to talk about Tesla all day, you don't want to talk to a bunch of people that want to talk about euro dollar. You see? But I'm not joking. Like that is a prototype that could be live next year. The high implied vol to sell premium. I don't know. That's probably not that difficult. The bigger thing is we have to start with what it's doing. Okay. Let's do this. All right. ZN is the 10-year T-note, by the way. So Pfizer, Broadcom. Okay. Broadcom. Okay. You see Broadcom? You could buy it and take it up. Now, Kyle, what if you were an options trader? How could you play it? You could buy a call on the yellow dotted line. Now, you probably don't want these shorter time frames. You want something that might go up 30 days, not 15 hours. All right, so let's back out a little bit. Let's get serious. Microsoft might have been a good one. Okay? All right. Because this only shows you the pattern break will be fulfilled in 7 days, but this might go up for 7 weeks. Okay? So you look at this and you're probably already bullish. Okay? That goes in there as far as how do you make decisions. You're probably already bullish in general on the stock market, especially with seasonality. You're probably already bullish on AI, Magnificent Seven, all kinds of things, right? So you're actually looking for a break of this consolidation for you to get into a trade. Great. Then you look for your little pullback. Great. So I could just buy this in the cash market, but you could also come up with an option strategy. So maybe you buy a call. and it's got a built-in stop. Okay? But you could do a spread and a strangle or a condor or a whatever. But they're in a situation like this, TRADARS would be able to say, hey, if you're an options trader, I can outline multiple different ways to help you set this up. In fact, it identifies, like I was showing you before, a lot of the work is trying to figure out what date and at what strike. And what's the risk? Like, some of this is very difficult to visualize. It's one of the things that tripped me up with options. Okay, like a short call butterfly. Buy this one, okay, buy the call, sell a call, sell another call. I'm like, what? And I can't figure it out. It would take me a half an hour to figure out if I'm making money or not. Okay. Look, I'm a simple man. So I'm like, oh, God, really? Well, for those that understand, you're like, ooh, that's smart. Maybe I like that. I don't like it. I don't like the risk reward. I don't like anything about that. Okay? But it will help you find the opportunity and plan it all out and visualize it and find the dates and the strike prices and that kind of stuff, right? Right? Option strategies for ExxonMobil Corp, NYSE, XOM. Okay? It found a rectangle and with the implied, if you will. So imagine you have a chart. Let's say you have ExxonMobil. I mean, we could probably find the actual chart. But imagine ExxonMobil looked like this for a while. Okay, and then we get a little higher high. How would you trade it? Well, a cash trader is going to trade the pullback, right? An options trader doesn't need to do that because it's already built in. So you could look at one of 7 strategies that get you up there. Or 8 or 9, whatever strategies there are. But it's all based on the same thing, right? It's just you and I may be trading it differently than a third person. Or if you think it'll stay in the range, yes. And that's the other thing. You're totally right. Undo. Okay. If that failed, okay, and it went, okay, you could be in one of these situations for a while. Yes. Well, then it would give you the different strategies for that. Once again, it's just saving you time. It's helping you focus on the right thing and saving you time. Yes. Yeah. But just so you understand, it's still using this page like any other trader would be using this page. Here's an ExxonMobil. I wonder if we can find it if I keep. Why don't we just do that? Under stocks, turn them all off except Exxon. Looks like it's come and gone because it was 2 days ago I got that alert. Okay. So it might have been looking at this range, huh? Although that's daily, so no, it wouldn't have. I wonder if it was looking at this. Yeah, that would have been it, huh? That's what it was doing, wasn't it? Buy a call. Why? Well, in the next 27th, so in the next 2 weeks, if it's lower than this, you're out for a loss. If it's not lower than that, you're going to make some form of money. That's it. Wait, you bought a double bottom? Uh-huh. You see? That's what it was doing. You're like, oh, smarty pants. Now, it could be way down here. It could be at $75 in 2 weeks. Not likely, obviously, that it falls from 110 to 75. How much money do you lose? You lose this much money. Doesn't matter if it drops 75. Doesn't matter if ExxonMobil goes out of business. You lose that much. But you also get the unlimited upside, right? So what if it went to 125? What if it went to 200? Yeah, well, your options leveraged. How much is it leveraged? Is it 10 to 1 or 40 to 1? Oh my God. Right? But anyways. Okay. What about a gold trading course? Yeah, sure. The only thing is I think it would take a lot of research because I know how I trade gold. But am I an expert in the world gold market? No. I would like to be, though. Juliet, have you done the oil trading course? That one I really enjoyed doing. We went through the legal contracts. We went through geology. We went through the step-by-step. We went through infrastructure. We went through distribution, retailing it. We went through some of the politics and the history, and it was really, really enjoyable. Oh, we went through the chemistry of, like cracking, for example. We talked about that. I taught people conventional drilling. We looked at fracking. We looked at the oil sands. I could do a simple how to trade gold, and I could be done in 35 minutes. But Juliet, watch that oil trading course and then say, I think you'll get a sense. Watching that oil trading course, you'll get a sense that I put a lot of time and money into that. And remember, I had a PhD working for me to build all the his expertise is in data animation, or visualization, data visualization. But go through that, and you'll realize if it took me 16 hours to deliver it, okay, then it must have taken 20 times longer to actually make it. Huh? Cool, right? So, hour and 20-minute lecture on geology. All right, and stuff like that. But then around the time of the U.S. Civil War, we started using, kerosene, which is funny because it's actually jet fuel, right? But anyways, kerosene being used for lighting. So you were not using whale oil and you weren't using candles. You were using kerosene, which is the first primary use of rock oil. But then coal, for the first time, started being used in housing instead of wood. And you can see this in the history, how quickly this changed in the United States, the conversion from wood to coal. Okay? Around 1900, 90% of all energy in the UK and the United States was coal. And once again, what's the major downside of that? Pollution. And again, just Google, look at Manchester or what's the one that's farther inland? Birmingham. Look at Birmingham, England, in like 1880 or something like that. Everything and everyone was covered in black soot. Okay, it was horrible. So anyways, but that's what it was like, 1900. Pretty much everything was powered by coal. By 2020, still 20% of the energy in the UK and the United States is still coal, which is fascinating because most people think we don't do it anymore. No, we do. And you may have heard that China builds, I think it started in the beginning and then boom, 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 boom. Here it is. This is actual coal. I paid $9 for this. My son yelled at me. Here's a piece of coal. Okay. It was $9 because a geologist sold it to me. So it's a real specimen. Okay, you see that? There we go. You see that? Beautiful stuff, right? It's hard. It's not charcoal. It's a rock. The interesting thing is it's black because it's got the hydrocarbons. It's oil. Coal is oil. Now, I went through a slightly different chemical process, and I'll describe that shortly, but it's all there. It's all in the same place. I even take it a step further where I talk about their hydrocarbons are what we use to power our economy. What do you consume to power your body? Carbohydrates. Interesting, right? So you eat plants, but you also eat animals that ate plants. That's where the animals got their energy, was from eating the plants or eating other animals that ate plants. And where did coal come from? Plants. Where did oil come from? Plants. Now, where do the plants get their energy? The sun. It all comes from the sun. And we just convert it and convert it and convert it. Oh, it's converted to coal. Now, what's the difference between oil and coal? Coal was oil close to the surface. And bacteria got in it and started eating the hydrocarbons as energy. They were consuming them as carbohydrates. So the hydrocarbons were getting consumed as carbohydrates by bacteria, and it partially degrades. And then being covered at the same time, but closer to the surface, then it gets blocked out of that and eventually turns under heat and pressure and time into a rock-like substance. But it just went from sort of liquid oil to a higher viscosity oil. As it's breaking down, it's getting thicker, like imagine you left your beef stew in the pot on the counter for 2 weeks. It's the liquid is gone, it's thick, it's spoiled, it stinks. Obviously bacteria is in there eating it and rotting it. Yeah, well, it's converted right into this new thing, and now you add heat and pressure and it'll turn into a stone. But there's still energy in it. It's just now it's a stone instead of liquid. And oil is usually miles below the surface, and coal is right at the top of the surface. But they were all plants and animals at one time, and it's all the same. What you consume is the same what your car consumes, and it's all energy from the sun. Oh, what? I mean, it's amazing, isn't it? Yeah. So we do 16 hours of this in excruciating detail. You will become an expert in oil refining, manufacturing, everything, distribution, legal contracts. One thing for sure is you're going to know. Yeah, we go on field trips and stuff. Okay. Yeah, gonna have to teach about seismology.
That once before getting fired. So there's got to be a different way. And so they drag the hydrophones, not geophones, geo meaning earth, hydro meaning water. So they drag it. It's very uncomfortable for the fish, but
look, I'm telling you, these courses are good. I'm not joking. Man, I enjoy doing that. So Juliet is like, hey, can you bust out a gold trading course? Yeah, sure. It will take me 100 hours and probably $6,000. But no, not 6,000. I shouldn't exaggerate. 2,000. It cost me $2,000 and 100 hours of my time, which is way more than 6,000. So I would be interested in doing that. I think before that, though, I would do real estate because I know real estate. I'm an expert in real estate. I took 3 classes at Harvard on real estate, residential and commercial. So I'd rather just knock out a real estate course. If you guys want to do that, that would be easy. It falls under the guise of investing, not really a trader's thing, but I could put it over at Investor Bootcamp. Cool. Anyways, I've gone too long. Sorry. I still say it like a Canadian, eh? Sorry. So anyways, Life is great. Life is good. Life is beautiful. But not everywhere. So that's why I say every day, and I do mean it, peace on earth. May the pips be with you. May our profits be above average. All members of TRADARS have access to today's meeting at 4 p.m. It's not on the calendar. I will add it now. You will need to RSVP, and it's every Thursday at 4 p.m. And we are going to technically plan all of next week. Yeah, today. We're going to plan out Monday, Tuesday, Wednesday, Thursday, and Friday of next week. So I will see you over there. Remember, anyone with a membership at TRADARS, right, traders.com, has access. If you have an FX Bootcamp membership, an Investor Bootcamp membership, okay, a swing trading membership or a day trading membership at Investor Bootcamp, you have access to TRADARS. You have a TRADARS account. I sent you your login details. So if you're over there, I connected your membership to TRADARS so you don't have to do anything. You already have access. Okay? So you could be an investor bootcamp member. I will see you today. Right? I will see you today at 4 to plan the future. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being here. I'll see you later.